Hey everyone, welcome back to Corporate Decoder. This time we're diving into the world of oil and gas with ConocoPhillips' latest annual report. It's a hefty document, and honestly, parts of it could put you to sleep faster than a warm glass of milk. But don't worry, we'll sift through the jargon and find the juicy bits. Think oil boom, new deals, and a few potential bumps in the road. This report is basically ConocoPhillips' story for the year. They're in the business of finding, producing, and selling crude oil, natural gas, and that kind of stuff. It's a global operation with activities in 14 countries from Alaska to Australia. Think of them as a giant treasure hunt, but instead of gold, they're digging for energy. A big headline for them this year: they bought another company called Marathon Oil. It's like a big fish swallowing a slightly smaller fish. This gives them more land to drill on and expands their reach in the US and even internationally. The company is structured into 6 main groups: Alaska, Lower 48, which is the rest of the United States, Canada, Europe, Middle East, and North Africa, Asia Pacific, and other international locations. Let's talk about what they own. It's all about reserves, basically how much oil and gas they know they can get out of the ground. They reported having almost 8 billion barrels of oil equivalent. Think of it like having 8 billion barrels of beer. They don't actually have beer, but in the energy world, it's almost as valuable. Most of their reserves, like 84%, are in stable countries that are part of something called the Organization for Economic Cooperation and Development. It's basically a club of rich and stable countries. Alaska is a big deal for ConocoPhillips. They're the biggest oil producer in the state, with a lot of land they haven't even explored yet. In the lower 48, they're focusing on unconventional plays, which are basically tricky areas where they need special techniques to get the oil and gas out. Canada brings in oil sands and natural gas, while Europe, the Middle East, and North Africa offer a mix of conventional assets, and Asia Pacific. That's where they're heavily involved in liquefied natural gas, LNG, which is natural gas that's been cooled down so it can be shipped easily. They're not just digging. ConocoPhillips has a marketing arm that buys and sells oil and gas all over the world. So think of them as commodity brokers trying to get the best prices for their product. Also, they try and stay ahead of the curve. They're working on technology to improve drilling, extract more oil, and reduce emissions. They are also building low carbon technology, but it is in early phases. Now for a bit of reality. ConocoPhillips operates in a very competitive space. They are battling other companies to find oil and gas and compete against them. They are also competing against other energy sources. They are also always trying to innovate and keep their operating costs down. The report also talks about how ConocoPhillips manages its workforce. It's all about attracting, keeping, and developing talent, and safety is the #1 priority for them. They have approximately 11,800 employees in 14 countries. They also claim they value their people and have flexible work schedules and help for parents. Now comes the serious part. Every company has to lay out its potential risks, and ConocoPhillips is no exception. A big one is commodity price volatility. Basically, the price of oil and gas goes up and down like a roller coaster, and that impacts their profits. If prices stay low for a long time, they might have to cut back on spending, reduce production, and even write down the value of their assets. There are also hazards in the industry. They also face regulations all over the world, and these laws can change, which can be costly. Climate change is a huge factor, and there are continuing efforts to reduce pollution. This may affect their plans and also reduce demand for their products. Also, there are certain legal factors in the way with potential climate lawsuits that could cost them. Remember that big purchase of Marathon Oil? Well, integrating those businesses may be more difficult and costly than expected. Also, the new shares that were issued might cause some stock price fluctuation. Cybersecurity is also a constant threat. Hackers could target their systems, steal information, or disrupt their operations. There were no unresolved comments from the SEC. According to the report, they also take cybersecurity seriously. They have a plan to deal with attacks, they work with experts, and their board is keeping a close eye on things. Alright, let's see how the stock did and what shareholders can expect. The stock trades on the New York Stock Exchange under the symbol SCORP. They reported some dividend and stock repurchase data, which help get cash back to shareholders. Here's where we get into the details. Sales were down slightly due to lower oil and gas prices, but production was up. This tells us they're pumping out more, but making a little less per barrel. There were some gains that came from some asset sales, operating expenses increased, and one-time costs associated with acquiring another company. Overall, for the year ended December, net income was at $9.2 billion compared to the year prior of about $11 billion. Capital spending, or basically investments, were $12.1 billion, including spending for acquisitions. So also touching on climate change, which is affecting the entire oil and gas business, it seems they are serious about reducing their operational emissions intensity. They will keep reporting how they intend to reduce Scope 1 and 2 emissions. All this financial information gets summarized up and certified by management and the independent accounting firm. They are the watchdogs who ensure all the reporting is accurate, though the accuracy of the estimates ultimately come down to judgment. When the bean counters are counting, they must make assumptions when it comes to long-term assets, asset retirement obligations, and environmental costs, as these are highly uncertain and hard to predict. All that information and data is what management uses to prepare everything. In addition, the board is regularly clued in on risk management and the company's strategy. Here they disclose proven oil and gas operations data such as production, pricing, and costs across different regions. It gives a deeper insight into operations of different geographic regions. They also talk about future goals for carbon emissions. Looking at ConocoPhillips' report, it's clear they're a massive player in the energy sector with a global reach and a diverse portfolio. Their acquisition of Marathon Oil is a bold move that expands their footprint and adds potential for future growth, but like any company in the oil and gas industry, they face significant risks. Commodity price volatility is always a threat, and the increasing pressure to address climate change adds another layer of complexity. Financially, they're generating a lot of cash, but profits were down a bit compared to the previous year. They're also spending heavily on capital projects and returning a good chunk of money to shareholders through dividends and share repurchases. Their climate strategy includes investing in low-carbon technologies, but this area is still in its early stages and carries significant risks. From a valuation perspective, it's important to consider ConocoPhillips' strong balance sheet, its commitment to shareholder returns, and its focus on low-cost production. However, we also need to factor in the risks associated with commodity prices, environmental regulations, and the energy transition. Taking all of this into account, a reasonable price range for ConocoPhillips might be around $100, $120, though a stock valuation is not advice. Overall, I'm cautiously bullish on ConocoPhillips. They're a well-managed company with a strong asset base, but the energy industry is facing some major challenges. The company is facing some new, unknown market conditions and challenges with the changing world economy. It makes sense to lean on ConocoPhillips' business acumen to weather these challenges and to make long-term progress. If you found this helpful, hit that like button and subscribe. Thanks for watching Corporate Decoder.